Afternoon, everybody, or good morning, depending on which part of the world you're dialing in from. And welcome to the first Salient teleconference being broadcasted live across the web. While we touch on this very important topic today, quite fittingly, World Refugee Day, as we speak about displaced people and how the world has changed, and how is it that financial inclusion is working, and how is it making the resilience effort much better in a lot of these countries. So please bear with me as we welcome Tia Anderson and Theresa with us today on this call. And let's give it another minute or so before they each do their introductions as people continue to dial in. In the meantime, let's just look at some of the stats which are around there with people which have been financially excluded or living on the margins of society. So we speak about the 2.2 billion people who don't have identity, which is the first challenge which we have in bringing people into the financial inclusion crisis. How do you give somebody an account, or how do you include them when they cannot prove who they are? We then also speak about the millions of people which have got no access to banking facilities, and how is this being changed? Very interesting topics today to be covered by Tia as well as Theresa. So Tia, can I hand over to you, and could you do a brief introduction of who and what you are at Mercy Corps and how Mercy Corps is just approaching this topic in general?
Sure, thanks so much. So at Mercy Corps, I lead our portfolio that's focused on financial services in protracted crisis, which is a large and growing area for Mercy Corps. For those of you that aren't familiar with Mercy Corps, we're an international agency working in 40 countries globally, primarily focused on countries that are affected by fragility, conflict, protracted crises, natural disasters, and I would say increasingly countries and regions within countries that are dealing with economic and political crisis. Mercy Corps really looks and works at scale. Last year, we reached over 30 million people, including 8 million refugees and host community members, including almost 1.5 million smallholder farmers. We're also responding today to some of the world's worst humanitarian crises. For example, the Lake Chad crisis in West Africa, Afghanistan, Somalia, dealing with quite a bit of drought in Somalia, as well as Ethiopia, South Sudan, refugees going into Uganda, as well as the Syria crisis. From a digital finance perspective, we have initiatives in around 30 countries, and with an increasing focus on digital finance. And more, which I think we'll get into in today's conversation, is really working at that nexus of humanitarian response and economic coping and recovery, with an eye to entry points for longer term financial inclusion for different segments of the population.
Thank you for that. Theresa, could you tell us more about yourself as well as the company that you've started?
Sure. So IFMR really works to ensure that every individual, every enterprise has complete access to financial services. And we have a three-pronged strategy to do this. We work at the level of the household. So we provide, wealth management and complete financial services in remote rural India to about 800,000 households. We also provide capital markets access to small financial institutions that are serving the underbanked and the excluded in various different asset classes. And the capital markets platform has scaled up quite a bit, is providing almost $2 billion of financing per annum. Overall, we impact over 20 million customers till date. And the overall approach has been, how can we use financial innovation as a tool to really drive impact and scale? This is why I think the conversation today about the future of finance really is super exciting.
Wow, that's amazing. And it's no small fry to reach those numbers of people that you're speaking about. Tia, can I go back to you for a minute? And could you tell me or share with the panel more broadly, why is it that Mercy Corps sees financial inclusion as such a critical part of the work that you're doing globally?
Sure. So for Mercy Corps, we see financial services really not as an end to itself, but really a rather means to an end. Really looking at financial services and longer term financial inclusion really as an enabler to our longer goals, both in the development sector, whether we're working on an initiative that's focused on long-term food security or looking for access, for example, to water or energy. We look at financial services as really allowing the end clients that we're working with the ability to reach those goals. And I would say just larger, looking at the sustainable development goals, there's not a huge focus specifically on financial services, but that's because we view them as really embedded with each of those goals. So for us, financial services, whether that's very, very small scale community level versus large scale working with a government agency or mobile network operators for bulk payments, we really see financial services as a critical key to both our work in the humanitarian sector and in the development sector.
Thank you. Sharita, similar question to you. Could you tell me, why is it that you are so passionate about driving financial inclusion, specifically in India? And can you share with us some of the impacts that you have seen about this change?
Yes. I mean, to us, sort of fundamentally, finance is, it's a tool, finance is sort of, it's a strange product, right? You don't get up in the morning and say, hey, I really want to buy accident insurance. It's just not that type of product, right? You either are protecting your household against some risk like health or drought or accidents, or you're worried about your children and their education, and you're using finance to save for the future. You need liquidity because you have volatile incomes. So finance is sort of the ultimate tool to me to smooth things out, to make your dreams and goals and aspirations happen. And it provides, what we believe deeply is that finance unlocks development, finance unlocks choices, and it's ultimately sort of unlocks the freedom of an individual or a household to make the choices they need to make about their future. Otherwise, it would, with unequal access to finance, it's as bad really, and as crippling as not having access to education or healthcare, because you just will not have the same opportunities. So in the areas that we operate, we have seen cultivable agricultural land go up, cattle ownership increase. There is a Harvard study that actually is doing a randomized control trial on the impact of impact of our branches and our rural retail operations. On the capital market side, just to give you a flavor, the pricing of let's say microfinance or low-income housing as credit asset classes have reduced over the last 8 or 9 years by almost 300 to 400 basis points, which is, I mean, sure, we could do more, but it's still a lot. The lower the risk premium on these asset classes, the easier it's going to be to provide access to finance. So we believe that both legs are important, and we've seen sort of significant impact of that already.
Sharita, so on that question of developing and reaching these people, how do you see technology impacting this going forward?
I think technology has the potential to change things completely. Just the way households access financial services today is horribly inconvenient, because the nearest we have in India, we have only, for example, 17 access points for every 100,000 population. Even after all, the ATMs and the bank branches and the banking correspondents, that is it. It's one of the poorest ratios in the world. And so you can imagine it's hard physically to get access to finance. Now, the mobile phone makes this easier. The smartphone also makes this easier. What we want to see ideally is that, let's say, if you have spare change and you're visiting a grocery store, you should be able to save that at the grocery store. right? It should be, finance should be a part of your everyday life. And we think that this is possible today because the number of access points with payment banks, and there are, almost 10 new payment banks, some of which are mobile network operators, which have taken the number of access points from, let's say 400,000 to 4 million. And that's a game changer, right? And, I think the other thing that has changed in India is just the cost of authentication has come down. Everyone now has a unique ID, and almost everyone, 1.2 billion out of 1.3 billion. And this process, which used to be very costly, now makes this customer very accessible and reachable, because you can verify who they are, and you can reach them on the mobile. While some types of financial transactions you have to have human assistance, like let's say it's a complex mortgage, etc., that can't really be done on the phone. At least not now for this customer base, but still the possibilities are limitless, for changing people's lives.
Theresa, are you seeing the individuals who now have identity embracing this change, or is it a very difficult crossover going from being cash comfortable to moving into a digital society? And either way, do you have views on what could make it easier for people to adopt to being digitally engaged financially versus them being cash comfortable?
I think, this is a really hard call. It's a tough question. The thing is that, when we segment, let's say, our customer base into personas to say, there is a certain demographic, let's say anywhere between the age of 15 to 30 that is highly comfortable with the use of technology, even in rural areas. And clearly, if those could be the key opinion leaders that influence the adoption of technology, or even become agents themselves and are paid for this job, I think that could be a significant source of change. There is also a lot of fear, right, in using technology, and we've done surveys, and we found that even people are afraid to write the wrong bank account number, and you can totally understand that it's a 12-digit number and you can get it wrong. And how do you make sure that you design the user interface in such a way that it's very tough to get it wrong once you've saved it in? So I think that both master users, as well as building trust, and and having people from the same community lead the way instead of sort of bank branch staff leading the way. I think that's going to be really important, because you can imagine in urban India, there are several access points. It is pretty convenient, but there is still exclusion because customers are not respected. Are not respected and are not welcome in bank branches, because they're meant for people like you and me, Nina, and not for them. So so there is still exclusion, and therefore the person who is reaching out is super important, and that will make all the difference. My sense is that all of this, I think it could happen much faster than we think. Everything in India is happening faster than we think. So I think everybody's saying 10 years, but I'm betting that it will take half.
Sure. Tia, can I ask you, how has technology impacted the way in which Mercy Corps has changed the way in which they support, especially in crisis situations?
Sure, it's changing quite a bit. We would like it to be, I'd say, moving faster than it is, but in reality, we also need to be working with the infrastructure and the environment and the level of comfort that our end users are comfortable with digital. One of the things Mercy Corps is well known for is we're doing quite a bit of work around electronic cash transfers in humanitarian crisis. So trying to really move a lot of our more traditional aid or cash onto electronic channels. And one of the things that we found in some recent research that we had done, 3 different case studies, one was in Ethiopia, one Bangladesh, and one in Zimbabwe, even though as part of these short-term programs, people received cash transfers once every month, once every 2 weeks for 3 to 6 months, depending on the program, what we really find is that our colleagues on the ground who are actually implementing the initiatives, as well as the end users, actually saw the value in moving onto digital channels. The efficiency, and I think for a lot of populations, that the transparency of when funds are sent, when they should be received, and when they could be accessed. But what we also found quite a bit is that there was very limited I'm just going to use the term digital literacy with a lot of times the population that we were trying to reach. A lot of them were more vulnerable populations. And I think that's something we're also seeing quite a bit today with some of displaced populations as well. Again, that's not always the case, but in some cases. So I think as we try to move to digital channels to not further leave people behind, one of the things that we really have to focus on is making sure that people who we're trying to reach actually have access to the mobile channels, the digital channels, I should say. So access to mobile phones, but then also really understand how to use those, because one of our priorities, of course, is around data protection and individual customer protection. So sometimes, even though we'd like to move it a bit faster, we have to really work at the pace and the speed that our end users are comfortable with as well.
Tia, could you share some more with us as Mercy Corps has moved over to more digital assistance in these things or in these programs and crisis situations? Are you finding that from a community perspective, it's having a different impact? Or do you think that it's more or less the same, whether it's in-kind assistance being shared or whether it's financial?
No, we definitely see a huge impact. For us, Mercy Corps, we're a huge advocate of using cash with ideally longer-term pathways to financial inclusion. But really, we find cash extremely important so that people, one, to stimulate local markets versus trying to replace local markets. And we also want people to have the option to decide what they want to buy and when they want to buy it. So it's a huge priority for us as an agency. And it also, when we move things, when we move over to digital channels, it also allows not only for people to potentially receive, humanitarian cash transfers, but it can also be a way to actually open up other channels, for example, information sources, communication sources that other people can access on those mobile channels. So we see it really as an enabler, digital financial services.
So just to make sure I'm capturing this correctly, so you're seeing this more as beyond just being a dignity solution where basically people have got the dignity of choice, it's also stimulating local economies. And now you've mentioned a very interesting concept of saying other people can use these channels as well. So would you be open, in a sense, you setting the rails, so could governments and other NGOs be using the same rails that you've put in place to reach these recipients?
I think for NGOs, definitely, and I'd say for governments, just especially if we're talking about forcibly displaced populations, there may be some different restrictions, but yes, it can be. So rather than for example, each different entity reaching out to people separately using different digital channels so that we can have one form of communication to also streamline communication. But again, I think we also have to make sure that if we're moving to digital channels, we're not leaving behind some of the populations that we're trying to reach because they don't have access potentially to digital channels or don't have the digital literacy or other forms of literacy to be able to actively engage.
That's a great segue, because that was going to be my next question. I just want to say it's great when partners come together and they really think about how everybody can benefit of doing something. And before I speak to you about literacy, because I wanted to speak to you more about language barriers in your situation, but Theresa, I wanted to ask you, do you find that there's a literacy challenge when it gets to financial inclusion which needs to be bridged before we can get true scale or get it to speed up?
I think that yes, today the way the financial services industry is organized is that, it's like a manufacturer, right? It's not like, it's not looking at customers' demands and designing financial solutions. Instead, let's say an insurance company manufactures insurance products, non-bank manufactures credit products, and it tries to match, it makes a product and tries to match the right customer to the product instead of the other way around. So, I mean, finance has operated always with very high entry barriers, very high degrees of monopoly in many, many countries, which has slowed down innovation. So I do think that while financial literacy is important, but if you go down to the fundamentals of, our households managing their financial lives as well as they could, given the tools they have access to, I think you will find overwhelming evidence. Jonathan Murdoch has done some work. There has been work in India as well to find that households are very rational and they're doing the best they can already. So I just want to make the point that I think that financial services industries, to go to the next level, will really have to flip themselves like any other industry. Apple doesn't say that, hey, you know what, you have to understand all the technical things that go behind, my chat screen. You don't need to. All you need to know is, I want to talk to this person. That's it, right? You're not expected to know anything else. Why is financial literacy expected? Why is it not enough that I need to have a very clear idea of where I'm going, what I want to do, what my constraints are, and then see how finance can help solve that. So I do think that the product approach has made financial literacy almost critical, but a solutions approach could make it much less critical, because then, for example, a long-term education type of product could, with liquidity and with insurance, could really be a full solution, and that's much easier to understand than the constituent products.
It's very interesting points that you raise here, but we don't need to understand everything in the back. I think the one thing which does come up is that there's a inherent distrust for financial institutions when we speak to people at the base of the pyramid.
Absolutely.
And
Absolutely.
I think that's probably where part of the need comes from, where people are wanting to understand the bit of money that I do have, is it safe? And is it affordable for me to be using the products? And I think that's where it becomes really difficult for us to cross those bridges. And which is great when you see people like Mercy Corps coming into that fold and pushing the same message at different times and at different times of crisis.
Yes. No, clearly, I think customer protection is important, and therefore for the customer to be aware of their rights is certainly important. Are you being charged the right interest rate? Are all the fees being disclosed to you or not? But at least, in India, the liability, one of the issues is the liability is not the providers, really, of providing finance. And that's part of the problem, right?
I've got a question coming through, which has come through from one of the audience, which has asked, what does your financial empowerment education consist of and look like?
So what we do at IFMR Rural Channels is really have a conversation with the customer on, what their lives look like. So what their family looks like, how many dependent either adults or children they have, as well as their critical goals and aspirations, as well as the volatility of their cash flows. So we get a good sense of what financial products might suit. So for instance, this conversation generally reveals, which is called a wealth management conversation, generally reveals much more clearly why, let's say, a family with one agricultural laborer and 4 dependents, 2 children, 2 adults, it's absolutely critical for that person to have accident and life insurance, because the lives of all the 5 family members actually depend on this one person. So we find that this is a much more intuitive conversation when had in the context of people's lives, and we collect a lot of information about the household through the wealth management conversation, which then enables us to offer the right financial services. So, and that in itself becomes like a financial education, financial empowerment tool, but it's much more practical rather than, telling people about premium waivers, which don't make sense, right? I mean, even I don't understand it. On insurance, for example, it's a marketing tool, really. It's much better to we think to talk about the customer situation and understand that best.
Okay, thank you, Tia. Your situation when you're dealing with customers is vastly different. I mean, whether it be a natural disaster which has struck or whether it be displaced people. What are some of the challenges that you have when giving people financial products? And the one which comes to top of mind is obviously language. When you're dealing with displaced people, you've obviously got different languages. But we'd love to hear more about some of the Mercy Corps challenges as you're dealing with programs, and whether it be from language to culture. Can you share more of that with us?
Sure. I would say, Mercy Corps, we really try to the extent possible to really act more as a market facilitator versus a direct market actor. We don't, and so in a lot of situations, what we would do, for example, in a more developed market system, we would actually, be working, going back to the question you just asked around, financial capabilities, we'd be trying to embed that different financial capabilities with whichever service provider that we're working with. And so that would also apply to displaced populations. But on the language question, what we find more and more is that, for internally displaced populations, there's not always such a huge language barrier, but there could be a literacy or numeracy barrier. But those would be the same barriers that person would have faced even if they hadn't become displaced. But we're seeing quite a bit now, especially with the Syria crisis, is as populations move across multiple countries, move to Greece, move to Europe, they're dealing with different alphabets as well, which is causing a much more difficulty as well. So again, going back to the question about when do we decide that we move to digital channels, it can be a very difficult decision, recognizing that if you're not only using a completely new language verbally, but also a different written language. So that's something we have to, my colleagues have to weigh fairly closely. But I would just say one of the things that we face in general when you're dealing with financial services, especially more in conflict or settings or with fragility affected regions, is that there's not always a pre-crisis and a post-crisis phase. And so many of the places that we work today, it really is a protracted crisis, meaning that there's maybe intervals when there isn't potential conflict, but there's not a pure reconstruction phase or post phase. So that's something that we have to factor in. And I think what we find often is it can be difficult to find financial service providers, especially in some of the very serious conflicts, who have the ability and are willing to take the risk to actually make investments in that space. And I think part of the issue as well could be from a humanitarian perspective. There's quite often humanitarian aid that can distort the market, which can also affect the interest and the sustainability of financial service providers to engage in that space. So that's something that we try to really address as a market facilitator, recognizing that the humanitarian aid may be short term, whereas the displacement actually could be very long. So how can we, as soon as possible, think about sequenced programming or sequenced partnerships to allow people, even if they do need initial cash transfers, to move them onto other types of financial services, whether that be to be able to receive remittances, to store value, to store funds, or also to save funds, send or receive payments. So for us, it's really kind of looking at recognizing even if it's a very acute crisis, we need to be thinking, how do we sequence different interventions and partnerships for the long term?
Tia, I've got two questions which have come through for you. I know we're going to have questions at the end, but as we're on these topics, I would really like us to address them. So sure. The question that has come through is asking, are you looking at the next stage of innovation in terms of expanding access to finance for refugees? And I want to tag on a little question of my own onto that and saying, can you share with us within these populations of when you're giving them financial access, how do you see that impacting their ability to bounce back or to respond to the situation that they're in?
Sure. So I would say to the second part of the question, I think even if we're dealing with displaced populations, I think, I focus more on the financial services side. I think we also need to apply and take what we already know about financial services. We're not starting from scratch. Even if we're working with financial services with displaced populations, I think we can apply a lot of the same lessons we already know from financial services in general, but also financial services for vulnerable populations. So in some ways, we do know some of that information, I think. But I would say also the question on innovation, I think what we're trying to do now in a number of different locations is one, as possible, do what we can to help one, understand what the actual needs are for different displaced populations. I think there's quite often a lot of assumptions with different populations about what their financial needs are and when. Obviously, their financial needs, especially if it's a refugee on arrival, is going to look very different, potentially 3 months, 6 months, 12 months, 5 years later. So what we need to plan accordingly. And quite honestly, often we hope that, a couple of years later, we don't even need to be engaged in that conversation. But looking at different innovations, again, I think there's a lot of opportunities in the digital space. I think there's a strong need to really focus on what can we do as well to help bring down the cost of different remittances, recognizing that a lot of displaced populations rely heavily on remittances, and I think that will only continue to grow.
The crisis is not going away in any way. It's growing year on year.
Exactly. And I would just say other innovations, one of the things that we need to do, one of the things that we're doing is also, again, what we know about financial services is really start creating different user profiles and understanding what is the potential business case for financial service providers with different financial segments, as well as looking into potential economic identities. So that kind of goes back to the ID question, because what we find over and over again, this isn't specific to displaced populations. Lack of an ID is a huge barrier for populations globally to be able to access formal financial services. I think sometimes it feels right now, it feels very acute in the displaced population, but we know that's actually a global barrier. But can we take advantage of that interest as an opportunity to really focus in on ID? So looking at potential government or functional IDs, obviously that's being done in India, but are there opportunities for digital IDs as well, interoperable digital IDs that the individual can own and potentially carry cross-border? Those are definitely areas we're interested in. I think it's very nascent, but it's definitely an area we're exploring as well as a lot of our partners.
The idea of a global digital identity which moves with you. Tia, another question which has come through for you, which basically asks, are you teaching these people their spending patterns? Are you speaking about spending plans, what bills they have to pay, and how to save and still be able to pay bills and live? Increasing credit scores and all of that. So not sure how much of that Mercy Corps is actually touching on. Would be great if you could just share some more insight.
I think it can look different depending on different countries and different populations that we're working on. But I think one of the things that we actually are doing, we're doing some research right now, both in Northeast Nigeria and also actually within Syria, specifically looking at a lot of these issues. So looking at current use of different financial services, understanding the role of financial services in different social networks, then really also understanding debt burdens. I think that's a huge issue. One of the things that we find, especially for refugees, is that they carry quite a large debt burden when they arrive in a new country. So realistically, what does that mean, and what are the different options for them to access?
Tia, could you elaborate a bit more on that, on when you say the debt burden? Could you elaborate on that comment?
Sure. I mean, what we found, and I know there's quite a bit more research coming out, and I think, in my opinion, more research needs to be done, is understanding is, often, especially for refugees, they've had to either the individual has had to borrow money or their family has had to borrow money for them to be able to cross different borders. Now that money needs to be repaid once they've reached whether their permanent location or their long-term permanent location, or even in transit. So understanding what that actually looks like, because one of the things we also think about with potentially with humanitarian aid or cash transfers, how much of that money is actually being used for consumption purposes versus being used to actually repay different debt. And again, these are things we know from financial services and the microfinance world. This isn't new, but that's something we have to consider when we're trying to potentially connect people to different longer-term financial services.
Thank you. So Rita, quick question for you. How can the private sector and development partners collectively advance service provision for the underbanked? What are your thoughts on that?
I think that, the entry of mobile network operators into banking is very exciting because mobile phones are sold and recharged through millions of outlets. These are little shops dotted across the country, largely, your neighborhood small grocery store. And in some sense, if these outlets could be used as access points for financial services, even simple financial transactions, that could be really transformational. Now, I think that, this is like laying the rails. You were talking about sort of somebody, Mercy Corps creating the rails and other NGOs, etc., benefiting from it. And this is clearly, going to lay the rails for everyone to ride on. Once this infrastructure is there, you can imagine today microfinance institutions spend almost, let's say, of every 100 rupees lent, almost 5 to 6 rupees is just spent on collecting cash, counting cash, transporting cash, storing cash, insuring cash, and so on. It's super expensive, right? So you can imagine if there are so many access points that are there, we won't need to use cash because that network is there. So I think the faster this network gets rolled out, the better it is, or always more likely to happen in urban India than in rural. Much faster. But I think that if the mobile network operators and payment banks do their job, I think that will be hugely, hugely transformational. I think it's sort of the single biggest thing that could happen here. Second, I think there are lots of private sector companies which are working in a very specialized way to understand the customer and profile the customer. Thea also talked about customer profiling, and I think it's an incredibly powerful tool to really target what financial services are appropriate for a customer profile, what education is appropriate, what products are appropriate. And I think that a lot of progress is being made in understanding those customer profiles and underwriting them and coming up with those algorithms which will keep improving over a period of time. The one note of caution is that a lot of business models today, maybe it's true in other parts of the world as well, but certainly in India, are being built on access to free data. So, you must have seen the I accept button on your smartphone when you install an app where they say, I will have access to everything on your phone and all your photos, all your contacts, everything possible. And almost everyone says yes, right? Because it's a binary choice. If you say no, you can't install the app. And a lot of, credit assessment apps are like this. I think that's going to change. It should change because the data actually belongs to the customer, and it's somehow today, because we don't have a strong enough data protection regulation, this data seems like it's free, but it's not going to be free because it belongs to the customer. So I think it's important to protect that, and also, it could be misused in the future. So I think those are the two important sort of private sector initiatives that seem very impactful for development.
So really interesting that you touched on the price of cash and how expensive it is, even though we're speaking about the superficial costs of cash, and it goes a lot deeper than that. Tia, would love to hear your view on what is it that the cost, or what is the cost implication to Mercy Corps for you guys moving away from in-kind to digital, or vice versa, and just your general perception of the costs involved with how you're trying to get aid to the correct recipients.
Sure. Well, I would look at more from just the financial service providers that we work with versus Mercy Corps as a direct humanitarian agency. So a lot of times, a lot of the different partners that we work with financial sector providers, a lot of them, see one, just the, everyday cost of cash, but they also see the long-term reduced cost when they can actually, when, for example, they can make disperse loans and also collect payments for digital platforms. So I think there can be many different stages, but I also know with a lot of the partners that we work with, there can also be some hesitations to move from cash disbursements or cash collection to digital, because it can also mean sometimes their staff profiles actually need to look very different than they do today, which can be tricky for organizations that are more community based. So I think, yeah, there's often I see in a number of places we work some hesitation. And I also think as you move to digital, we also need to be aware of, whereas again, as I said, we're, very huge advocate of moving to digital channels, but also need to be aware of, following some of the different do no harm perspectives as well, and making sure that, for example, in a household, if a female was in control of managing the cash, sometimes when things move to digital, if, for example, they have to go to the agent more and they need to be accompanied by a male relative, what does that also mean for household dynamics? So that for us as Mercy Corps, when we're looking at different financial products or different delivery channels, working with some of our partners, really trying to take all these different aspects into consideration.
Tia, another word or another question for you, which has come through from Lindiwe at the YWCA, and she's asking, as more refugees are arriving and immigrants are arriving, what is the ideal way and how do we include financial literacy to prevent them from being a bigger debt burden in their host countries? Do you have any views on this? And I know this is a really, really tough question and would probably take a number of people to get to the ideal answer, but just wondering if you actually have a view on this. And then Theresa, I would also like you to give a view on how you think that is possible.
Sure, and the question is to lower the debt burden or to understand what the debt burden may be?
I think it's more to just prevent it. The question reads as if, how do we prevent the debt burden in a host country? So by giving, my interpretation would be by giving early financial education, that they do not find themselves coming into a debt burden. But what does that education look like? And how do we approach that collectively from an industry perspective?
Sure. I mean, I think Theresa had some really good comments about, financial education, financial capacity in general. It needs to be integrated. It needs to be adapted, based on age. But I would also say it can't just be focused around education or the financial service provider. I think it's also how are we looking longer term to actually integrate these different populations into the local economy as well, so that they can actually be earning income and cash flow outside of the humanitarian sector. So I would look at it that way. I think there could be, different trainings around managing cash flow, these different types of things, but also, a lot of populations that we work with displaced, they're entrepreneurs. They have this background. They weren't necessarily, they're not necessarily economic migrants. A lot of them were forcibly displaced. So they have this, but they've had to take on some of these debt burdens, not necessarily by choice, but by the situation. So I think it's following a lot of the strong principles around, financial capacity building, understanding different cash flow, trying to make small payments in advance versus having to save for large objects. But I think it's also just as important recognizing that displaced populations or refugees, as feasible, obviously there can be quite a bit of issues around legal employment, depending on legal status, but integrating populations into local economy as soon as possible to also increase their cash flow and increase their dependence versus their independence, I should say, versus dependence on humanitarian actors.
Okay, perfect. Another question has come through from you, from Nat, saying, great information, and we've heard a lot about debt, but what is happening on the savings front? Is anything being done to help refugees preserve and transfer savings before fleeing a country? And I think that's a hot topic because when they leave, they lose everything which is physically theirs, but
right.
Do they have any access to their funds which they have built up in their home country?
That's a really good question. I think in some situations, yes. I think it depends on why they had to leave that country. For example, if it was they're having to flee the country because of, potentially the government that was in place, and that if their savings were held in government. I mean, I think that kind of goes back to an earlier point that one of you had made, is that overall there can be, especially for more vulnerable populations or low income populations, a lack of trust in financial institutions. And I think this kind of can represent one of the reasons why, even on a very heightened scale. That being said, I think there is an opportunity to really not only promote savings, I would say, as an entry point, especially for displaced populations that aren't coming with quite significant funds, is focus on savings, but also focusing initially on even safe storage of the funds that they do have. I think that's a very initial entry point. And then I think moving to savings is obviously very critical, and also recognizing what are opportunities for us, thinking of even the larger pay-as-you-go models. What are opportunities versus having people having to save for large sums to have to potentially buy productive assets? What are opportunities for us, for people to almost a small leasing model to be able to pay for some of these in small payments, incrementally, pay in advance? I think there's a lot of different opportunities and innovations in this sector. So rather than people having to take on debt, what are ways they could be paying small payments towards some of the assets that they need as they're in transit, or as they, well, I guess not as in transit, but as they settle. And I think that's a real exciting opportunity for those of us working in this space.
Tia, we've heard astronomical numbers today just of how long people actually sit in transit. And the one stat I heard, people were going, if they've been in it for 5 years, they're probably going to be in there. Then they start counting in years of 10 increments. And the average time apparently at the moment is about 25 years before people get out of the refugee camp cycle, which is unbelievably long. If somebody comes out of that cycle and they've landed up in a host country, generally, how long does it take before they are integrated and well settled? And is there anything that can be done to expedite once somebody arrives in a host country to make sure that that process becomes shorter, or is it short enough in your opinion?
Sure. Well, I think, today, most displaced populations, and again, talking more refugees versus internally displaced, aren't in camps. They're actually living already with host communities. So I think there are opportunities. One, to, again, looking at what are opportunities for us using, one, financial services, but I would just say overall kind of thinking about economic recovery for integrating populations within the local economy. So those are some of the things that Mercy Corps we're really focusing on. So rather than siloing refugees or siloing IDPs in standalone different humanitarian programming, what are opportunities to really to integrate?
Okay, thank you. So Rita, quick question for you. Even looking at India, who's got a huge migrant population, do you see innovation playing a way in which we financially educate people at the base of the pyramid?
Yeah, India certainly has a very large migrant population, and in fact, the days of Aadhaar, which is the unique ID that was launched by the government about sort of 3 years ago, the situation of a migrant laborer was not very different from that of a refugee, because in some sense, India is like many countries, and if you go from one state to another with zero identity, your situation economically is very similar. You lose all credit history, you lose all relationships, potentially even because only informal savings channels were possible, so which are called chit funds, which are rotating savings schemes. You could even lose all your savings because this customer base does not save in banks today. I mean, the penetration of savings in the informal customer base is as low as 0.5%. So I think I read on the chat screen, how we're doing on savings versus credit. Well, the answer is it doesn't look pretty. I mean, the credit is doing much better. There is miles to go in both directions, but savings is much, much worse. So I think that financial literacy can definitely play a part, but again, I think the availability of credit, of savings at the point of time when you need it, I think that is really critical. So I think financial literacy is fantastic on an ongoing basis. However, if you moved and you really needed to pay your housing deposit, for instance, you just need it, right? And you need it immediately. Let's say for a migrant laborer who's looking for a new place, and you end up, let's say, creating debt of 80,000, and very likely at much higher rates of interest than would have been available in the formal sector. But the thing is that the formal sector, for instance, has turnaround times of, it could be infinite. It could be, in a good case, 30 to 60 days, with lots of rounds and running around to the bank for various different pieces of documents, which you may or may not have. So it's highly, highly inconvenient. So I think it's very, very necessary to have access to finance or savings when you need it, not 3 months later.
If you're hungry today, you need food today.
Exactly.
Another comment has come through, and I'm going to put it out to both of you just as we speak about financial education coming out. And the question that they've used the example of the Walmart program, where they've got a sweepstake that for every dollar you save, or for every dollar you save, you can win $25 based on that. And would love to know, do you think this is an effective way of doing financial inclusion, or do you think there needs to be more of a traditional explanation and the importance of it?
I personally think that incentives, encouragement is going to be super important, because we have also tried passive approaches like save in your savings account. The access point is close by. This is good for you. Please save 1,000 rupees a month. And we have tried more active approaches, like actually a person, a field agent shows up at your doorstep every month to collect the money, and it makes an enormous difference. It makes an enormous difference to understand what it is you're saving the money for, so it's not generic. Yeah. I think that's one. And second, that encouragement, that nudge, the push. You feel embarrassed if the person comes to your door and you don't give them the money. I mean, that really, really, really does make a difference. It's sort of like, I mean, it's everybody understands it's great to go to the gym, but it's not so easy to do it, right? So I think a lot of incentives work, personal trainers work. That sort of the convenience and the encouragement. I think from our initial, it's not enough, but from our initial pilots, etc., it looks like it works very well, and also that's what makes the informal finance channels very attractive.
Yeah. So as we start wrapping up, we've got about 7 minutes left to go. So thank you for everybody who's joined us on the call, and please send through any of the last minute questions that you may have. And Theresa, could you tell me, if you had an ask right now of what do you see the future looking like and what you wish people could do more of, what would that ask be of everybody, and how do you see this playing out on a long-term basis?
I think, my ask, would be really we need more competition in the provision of financial services. I think the whole world is changing in this respect, but we need to start treating the consumer like a consumer, and start respecting the consumer, whichever income segment they come from. Because if you look at, let's say, what's called the consumer goods like shampoos, soaps, stuff like that, that industry has innovated so much. In developing countries, how can they distribute shampoo sachets for 1 rupee? How is that possible? Why can't finance do it? Clearly, other industries have cracked something that finance has not been able to. My theory is it is to do with competition, because it has needed to. There have been monopoly profits available. I think that regulation and policy all over the world should take that away. to create a more level playing field, so the customer at the bottom of the pyramid gets treated like a customer with
Awesome.
by more players.
Thank you. Tia, the questions are coming through fast and furiously for you as people are trying to get the last couple of minutes in. So the one question is, can you give an example of the most effective private sector non-profit partnership program for the unbanked? Don't know if you want to just shoot something off there, because I would love to give you the opportunity as well, just to wrap up and say, what is it that you would like to see change, and who are there, or what partners are there that could be able to help you be more effective?
Sure. Yeah, I think there's growing partnerships. I think, one of the things that, we're really promoting, and I'm seeing happening more and more, and I'd like to see happen more, especially not just with displaced populations, but I would say in general, and more countries and regions and countries that are, facing different aspects of fragility, is real blended finance. So donors actually working with, for example, with impact investors or different investors for investment. So how can donors, more institutional donors, actually be buying down the risk of some of those investors to invest in some of these countries? And how can groups like Mercy Corps or other development actors help build a pipeline of micro enterprises, small, medium enterprises, for those investments to happen? So rather than just focusing on individuals for finance, really looking at it more of an ecosystem. So I think that's where I'd like to see things happening. And I would just say, what I'd like to see happening, I think from a pure finance perspective, is really looking, and it was touched on earlier, is some tiered know your customer regulations. That's an area that really that can really be a huge barrier in so many of the different countries that we work. And I would also say, really going back to the trust issues, not only in formal finance, but I would say even in informal finance, is really around really strengthening customer protection regulations, and around opportunities for customer recourse, to really help build some trust in those institutions as well. Because I don't think if they're there, people aren't going to be able to use them. And I think we would all say the same things with our money.
Another question which came to very much on what you're touching now with KYC regulations is, how is Mercy Corps working with government regulation when it comes to integrating refugees into local communities? And the example that they brought up here was in Athens, that the refugees are there, do not have the opportunity to actually open businesses or create employment, and they're really battling to find employment. So is Mercy Corps working with local regulators to try and change regulation?
I would say one of the roles that we play, and I think it's an appropriate role for us to play, is advocacy in these areas. We have the opportunity to be working very closely with a lot of these different communities. So it is part of our responsibility, one, to be respecting local regulations, but also be working in partnership to see how we could adapt them or adjust them, so that different populations, again, going back to the point, so they can also be integrated into the local economy.
Okay. So there's a yes/no answer, and for both of you. So do you think there's place for blockchain in the future within this space?
Yes.
So yes.
Yes.
Within the Mercy Corps space, I'm lucky enough to work with a number of colleagues who are definitely much more comfortable or understand blockchain much more than I do. I mean, I'm comfortable with it and understand it. Where I see the value in blockchain is that the decentralized nature. But I also, the value I see for blockchain is potentially the value with digital IDs, but I also see a huge amount of value in the agriculture sector versus smart contracts, and also traceability of agricultural products, so that the actual smallholder farmer actually can receive what they're actually owed. So I think there is a lot of opportunities. There's a lot happening in the space, and it's a space that we're very interested in and active in today.
Perfect. Theresa, do you want to give me your yes/no?
Yes, absolutely yes, because it's a great way to enrich customers' digital footprint. I think also for women, many missing women today, and could really enrich that digital asset for the customer.
Okay, thank you. Salient, thank you very much for hosting this first of its kind Resilience Practitioner webcast. Very entertaining, very interesting, and I think there's a lot of conversation still to be had in this place. Financial inclusion remains critical throughout the world. The refugee crisis continues to grow. that population needs to be addressed, and we need to find new solutions, and we need to use innovation in the right way. And thank you for all our participants who joined. Please keep sending through information to Zalient, who I'm sure will be hosting more of these webcasts in the future, as this topic is really, really critical, and there's a lot of information going on around it. May you all have a great day, and thank you again for joining us. And thank you very much, Tia and Theresa, for sharing your views, your opinions, and sharing the awesome work that both of your companies are doing in this space and getting more people financially included.